Most people think the IRS cares about what you call your business. They do not. They care about how you pay yourself. Last year, over 70% of new micro businesses picked LLC because it sounded safer and easier. Then tax season hit, and half of them found out they were bleeding thousands in self-employment tax that an S Corp election could have saved. Yeah, I said it. The boring paperwork choice can swing your bank account by $5,000 or more, even if you only made $6,000. Stick with me, because I am about to break down LLC versus S Corp taxes with real calculator examples. And I promise this is the stuff your accountant probably glossed over because they assumed you were not ready for it. Spoiler alert, you are. So first, let me tell you what almost everyone gets wrong about this. First, insight. An LLC is not a tax thing, it is a legal thing. When you form an LLC, the IRS basically shrugs and says, cool, but how do you want to be taxed? By default, if you are solo, the IRS treats you like a sole proprietorship. If you have a partner, you are a partnership. That means every dollar of profit gets hit with income tax plus self-employment tax. Self-employment tax is 15.3%, and it covers Social Security and Medicare. It is the reason your tax bill feels like you got mugged. An S Corp is not a business type. It is a tax election. You still have an LLC or corporation legally. But you tell the IRS, hey, tax me like an S Corp. That one form changes the whole game. Second insight, S Corp saves you money through payroll, not magic. With a normal LLC, all your profit is self-employment income. With an S Corp, you put yourself on payroll and pay yourself a reasonable salary. Only that salary gets hit with the 15.3% Social Security and Medicare taxes. The rest of your profit comes to you as a distribution. Distributions are not subject to self-employment tax. You still pay income tax on all of it, but you dodge the extra 15.3% on the distribution chunk. Let me run real numbers so this hits home. Say you are a freelance designer in Texas. You cleared $8,000 profit this year. No expenses for this example, just to keep it clean. If you are a default single member LLC, the math goes like this. You pay income tax based on your bracket. But before that, you pay self-employment tax. Roughly 8,000 times 15.3% is $102,240. That is just for Social Security and Medicare. Then you pay federal income tax on top. If you are in the 22% bracket, that is another $1,760. State tax depends on where you live. Texas has no state income tax, so we will skip it. Total IRS bill is around $29,840. Ouch. Now file that S Corp election and do it right. You decide with your accountant that a reasonable salary for a designer with your experience is $45,000. The IRS does look at this, so do not get cute and say $1,000. Reasonable means what you would pay someone else to do your job. So you run payroll. On that $45,000 salary, you and your business split the 15.3%. You pay $3,442, and your business pays $3,442. Total $6,884. The remaining $35,000 of profit is a distribution. No self-employment tax on it. Zero. Now, income tax, you still pay income tax on the full $8,000. At 22%, that is still $17,600. Add the payroll taxes of $1,684. Total IRS bill is $2,484. You just saved $356 by filing one form and running payroll. That is a vacation. That is a new MacBook. That is 4 months of health insurance. And you did nothing different in your business. Same clients, same work, different tax setup. Third insight, S Corp is not always better. This is where folks mess up. They hear S Corp saves money and they jump without doing math. If your profit is low, the savings get eaten by costs. S Corp have to run payroll. That means payroll service fees. It means quarterly filings. It means a separate business tax return called a Form 1120S. Your CPA will charge more for that. If you only made $3,000 profit, the reasonable salary might be $25,000. The savings on self-employment tax would be on the $5,000 difference. That saves you $765. But payroll might cost $600 a year, and your CPA adds $400 for the extra return. You just lost money. The sweet spot for most micro businesses is around $6,000 to $8,000 profit. Below that, the admin costs usually kill the benefit. Above that, the savings scale fast. At $12,000 profit with a $6,000 salary, you could save over $9,000 a year. Fourth insight. Distributions are not a loophole to avoid taxes. I see this all the time on TikTok. People say just pay yourself $1 and take the rest as distributions. The IRS is not dumb. If you are the only person working in your business and you take a $1 salary, the IRS will reclassify your distributions as wages. Then you owe back taxes plus penalties plus interest. You have to pay yourself a reasonable comp. What is reasonable depends on your industry, your experience, your location, and how much time you work. Get a salary study or talk to your CPA. Do not guess. Fifth insight. You can switch mid-year, but it gets messy. You do not have to wait until January. You can elect S Corp status during the year if you qualify. But you will have to split your books. Part of the year is taxed as LLC, and part as S Corp. That means more accounting headaches. Most people switch January 1 to keep it clean. And let me give you a relatable analogy because yet this stuff gets dry. Think of your business like a lemonade stand. The LLC default is like selling lemonade, and the government shows up and takes 15.3% of every single cup you sell for Social Security and Medicare before they even ask about income tax. S Corp is like hiring yourself to run the stand. The government takes that 15.3% only on your wages for working the stand. The extra profit from selling lemonade at a premium, because your recipe is fire, does not get that extra tax. You still pay income tax on all the lemonade money, but you are not paying the employment tax on money you made as the owner, not the worker. Here is where it gets personal for me. When I started my first business, I was LLC default for 3 years. I was proud of hitting 6 figures. Then I saw my tax bill. I paid over $18,000 in self-employment tax alone one year. I felt sick. I thought I was bad at money. Turns out I was just bad at tax structure. I filed S Corp the next year. Nothing else changed. Same revenue. My tax bill dropped by $7,200. I was mad. Mad at myself for not learning it sooner, and mad that nobody explained it without the jargon. That is why I make these videos. Because if you are a micro business owner grinding every day, you deserve to keep more of what you earn. Now, a quick gut check before you run to file Form 2553. Ask yourself 3 things. Are you consistently netting over $6,000 after expenses? Can you handle payroll and the extra paperwork? Are you willing to pay yourself a reasonable salary even if you want to reinvest everything? If the answer is no to any of those, stay LLC for now. You can always elect S Corp later. This is not a forever decision, but if you are nodding yes, then talk to a CPA this week. Do not wait until April. S Corp elections for 2026 are generally due by March 15 if you want it for the whole year. Miss that and you wait another 12 months. One more example, because I know you like numbers. Photographer in Florida makes $100,000 profit. LLC default pays about $1,300 self-employment tax plus $22,000 income tax. Total $37,300. S Corp with $5,000 salary pays $7,650 in payroll taxes. Same $22,000 income tax. Total $2,965. Savings $7,650. That pays for a second camera body and a lens. See the pattern. The higher the profit, the bigger the gap. But remember, you cannot take it all as salary either. The IRS wants payroll taxes. So you balance it. Your CPA helps you find that balance. Here is the savage truth. The tax code is not fair. It rewards people who understand the rules. Large companies have teams for this. As a micro business, you are the team. Learning this one election is like finding a cheat code that is actually legal. Do not let anyone tell you S Corp is too complicated. Running payroll takes 15 minutes a month with Gusto or QuickBooks. The extra tax return is one more form. Saving $5,000 to $10,000 is not worth a few hours of admin, then I do not know what to tell you. All right, so let me wrap this up. LLC gives you legal protection but defaults to self-employment tax on everything. S Corp is a tax election that lets you split income between salary and distributions to reduce that tax. It works best when profit is above $6,000 and you are ready for payroll. Do not go too low on salary. Do not assume it is always better. Run the math with real numbers from your business. And now I want to hear from you. If the IRS gave you a refund of all the extra self-employment tax you paid before you learned about S Corp, would you take the cash or would you rather they erase 1 year of paperwork instead? Drop your answer below and tell me what your profit was last year. Let us argue in the comments about what a reasonable salary really looks like for your industry. Subscribe if you want more breakdowns with real numbers and zero fluff. We do this every week for micro business owners who are done leaving money on the table.